Good morning, hello and welcome to this Money Controls live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's Tuesday and we have seen subdued markets in the past 3 days. Whether or not it will be the fourth day of subdued session is something that we will be keeping a track on. But if you look at the GIFT Nifty trends, pre-opened rates, both of them are suggesting a muted start with the Lal Street. And not much support is coming in from the global markets too. So in the past, when we did have global cues which was supportive, we kept falling despite that. But today it remains relatively quieter in comparison, because if we look at the Asia Pacific markets, that fell this morning as the street is awaiting any progress in trade talks which is reached between China and US. If you look at so far, Japan, UK, Indonesia, all of them have got the trade deal, and UK has got the lowest tariff rate so far at just 10%. But Indian deal, that continues to remain elusive at this point of time, as because we are expecting that it could get even more delayed beyond that August 1 tariff deadline. Now coming to how the US markets have fared, we did see the S&P 500 and NASDAQ hitting another record highs, but is settled flat while Dow Jones declined in yesterday's trading session. Now, if you look at the US markets, they have been hitting record highs day after day. About 170 companies have reported their quarterly performance from the S&P 500 index, and 83% have beaten street estimates. So that's why you can see the US markets have been on a strong footing this month itself. But yes, India's earnings growth, that has remained sluggish so far. Investors have been questioning whether these valuations warrant a check at this point of time. But remember that these are the lower levels that is where the investors can start hunting when actually markets pick up pace going ahead. Now, we'll also be having more earnings reaction which will be taking place today. We'll discuss about IndusInd Bank performance. Yesterday, it did deliver a muted set of performance, and now brokerages continue to remain on the bearish side for the counter, given that there was a sense of asset quality deterioration. The lender faced some loan growth pressure. Margins continue to remain under pressure too. We'll also be taking some of your stock-related queries also, so keep posting them on our live feed. Now, let's quickly take a look at the top headlines, sir. Stocks on Wall Street end mixed as traders look past the deal announced between US and EU. The S&P 500 eked out gains while the Dow ended lower. A big week lies ahead as Street awaits the Fed decision, jobs data and August tariff deadline. Markets in Asia open lower as Street is awaiting a decision from US-China trade talks taking place in Sweden. Meanwhile, the GIFT Nifty is indicating a muted start for our own markets. Oil prices have climbed on the European Union trade deal, the potential China tariff truce extension, and President Donald Trump shot a deadline to end the Russia-Ukraine war. If you look at the gold prices, that fell to lowest in 3 weeks ahead of the Fed meeting. And in key earnings, IndusInd Bank's net profit beat estimates despite falling 72% on an annualized basis. Also watch out for more earnings reaction. L&T and Asian Paints will be reporting their quarterly performance today. Alright, if you look at yesterday's trading session, we did see another weakness, another weak day for the markets, because the Nifty fell below that 24,700 odd levels, and it was the third consecutive day decline for the Nifty too. If you look at the broader end of the markets, mid-caps falling for the third straight day, small caps also extending the loss to the eighth straight day as well. So not much excitement and of course participation that came in from the broader end of the markets too. If you look at the sectoral indices, barring the Nifty FMCG and Pharma index, all of the sectors have ended in the red. And Nifty Realty, that continues to be the worst sectoral performer. After last week also, Nifty Realty was one of the worst sector performers, and yesterday also it saw a sharp decline of about 4% too. But yes, in key earnings today, we will be watching out for more reactions. Asian Paints, L&T, NTPC, all of them will be reporting their quarterly performance today itself. But coming to the cash flow data, FIs that stood as net sellers yesterday, with selling about stocks which is worth about nearly 6,000 crore rupees in the cash markets, and DIIs buying about 6,600 rupees in the cash markets in yesterday's trading session. But if you look at the option Qs data, Nifty put call ratio continues to slow, that there is a slowing momentum in the markets. Nifty put call ratio falling to about 0.64, from 0.7 levels in the previous session, and the stock that continues to be part of the F&O band, that includes the likes of RBL Bank. But yes, we have the Sensex monthly expiry today, so we will be watching out for any volatility as well going ahead in today's trading session. But yes, if you look at the headline indices and the pre-opened rates, both of them have been signaling a muted start for the markets. Sensex down about 270 points and Nifty also below that 24,650 levels at this point. So yes, we're about to see a negative start for the markets too. But just a couple of minutes before we actually hit the open, let's quickly get on board with our technical expert of the show. Joining me is Jay Thakkar, Head Derivatives and Quant Research of ICICI Securities. Jay, good morning. How does the market setup look like? Because Nifty has been on a sliding trend. Today pre-open rates are pointing out again a breakage below that 24,700 odd levels.
Good morning to you, Lovisha, and thanks for having me on the show. As far as Nifty is concerned, the overall trend seems to be negative, and I had this view earlier as well when I had discussed last on money control that main reason for a probability of a downside was the likeliness of the IVs expanding, because IV has actually contracted quite a lot in this series and it had fallen to below 10 levels, Lovisha, and both on Nifty and Bank Nifty, in fact, almost fallen to 10 levels, so 9-10 levels IVs with the reading of the IV percentile and IV rank, which had actually fallen to their 1 year low, clearly indicated expansion in the IVs. And generally, most of the time, which you have seen, or at least 70 to 80% of the time, that whenever the IVs expand, you have a downtrend in the market, and that is what we have seen. 20-30% it has been that both IVs and markets have been going up. If the event has been quite positive, so it's when the events are when the index is surrounded by the events, probably if the event
Okay, I think there's a little bit of a technical snag with Jay. We'll just try to reconnect with him, but just a couple of minutes before we hit the open. 1 minute to go, but yes, one stock that is in focus, that is your IndusInd Bank, that we'll be watching out for today's trading session, because like I was mentioning, that the net profit has declined about 72% on a Y-on-Y basis, and net interest income has also declined by about 14.2% on a Y-on-Y basis. Brokerages on a large remain quite bearish on the counter. They've given out, a sell, hold ratings across the lender itself. So we'll be watching out for any sentimental reaction that could play out in IndusInd Bank also. Earlier, we did see HDFC Bank and ICICI Bank reporting numbers, and there was some resilience which was reflected. Despite that, Bank Nifty index that continues to remain in the negative territory. But yes, coming to the first trades that is coming on your screen, we have opened in the negative terrain below that 24,650 mark. So yes, 0.2% decline coming in for the Nifty at this point of time. Sensex is also opened with about 250 points decline, 270 points decline, with about 0.3% cut. If anything, cues that we need to take from the Bank Nifty index, like I was talking about, 100 points decline coming in for the Bank Nifty index too, with about flat to a negative bias for the Bank Nifty index as well. Mid caps that continue to underperform for the fourth consecutive day at this point of time, extending the losses to the fourth straight day with about 0.1% decline. So all in all, given that the global cues were also not quite supportive, here also we are seeing, despite that, we have been falling at this point of time. But yes, let's take a look at some of the more levels. India VIX that continues to spike about 1.5% above the 12 odd levels. So any complacency, earlier we were at 10 levels, then we slowly cropped up to 11 yesterday, and now finally we are once again at 12, indicating that there is an emerging fear in the markets, given that the valuations have been a question given the sluggish earnings so far that the India Inc. has given out. On the other hand, let's take a look at some of the other sectoral gainers and movers. Nifty IT index once again declining in the trade today with about 0.6% decline. Nifty Metal index with about 0.2%. Like I was talking about, Nifty Realty index, one of the top sectoral loser yesterday. Today also it has opened with a negative bias. Flat, however, with a negative bias. On the other hand, Nifty Auto index also moving very flat in this market. What is, however, doing well, that is your Nifty Pharma index, which is open with slim gains, flat with a positive bias, and PSU banks, however, has also taken a little bit of a forefront. On the other hand, if you look at the broader end of the markets, mid caps and small caps, both of them have been, giving out negative gains, with about small caps seeing a sharper cut of about 0.4% in comparison to the Nifty Midcap index. But let's take more look into the top gainers and losers on the Nifty 50. JSW Steel, that continues to do well with about 1% gain. Geo Financial, Tata Consumer Products, with Nestle. So some of the FMCG stocks are dominating the top gainers list on the Nifty 50. So you can see Tata Consumer, Nestle doing well on back of that. HUL also will be reporting its numbers ahead due this week. We're seeing a gain of about 0.3% on HUL too. Bajaj Finance, after 2 days of consecutive losses, it has taken a list into the top gainers with about very slim gains, 0.4% gain coming in for Bajaj Finance too. Coal India and ONGC also remain one of the top gainers on the Nifty 50. But let's take a look at the way down. Bharat Electronics, after it reported its Q1 results yesterday, has taken a beating. Yesterday also the stock was down, ended the day lower, and today also the stock has opened with about 2% cut. Infosys, Wipro, tech stocks continue to remain laggards with about a % decline. So yes, you can see Infosys, Wipro on the back of that. SBI Life, after 2 days of consecutive gain, you can see a little bit of a profit booking on the counter with about 0.8% cut. Eternal not doing well with about 0.8% decline. Some profit booking on the counter, given that after its Q1 results, the stock had seen about 20 plus surge. Shriram Finance also not doing well. Yesterday, one of the top Nifty gainers on the back of its Q1 results. Today, seeing a little bit of a negative reaction with about 0.6% decline. But let's take a look at how IndusInd Bank has been doing, because that was a stock in focus. Yesterday, the management did indicate that there is some asset quality deterioration, and the NIMs that could be felt throughout the FY26 end too. So yes, let's take a look at how IndusInd Bank has been doing at this point of time. If you look at, it has opened up with gains of about 1% at this point. However, if you look at the figures, if you look at net profit figures, it did decline about 72% on Y-on-Y basis, but it was better than what the street was expecting, and that is why you can see some gains on the counter too. However, if you look at the NII figures, that declined about 14% on a Y-on-Y basis. Margins saw compression of about 79 basis points, and provisions shot up by about 68% on a Y-on-Y basis. Asset quality also felt pressure. It saw deterioration, and the net NPA rose about to 1.1% versus your 0.6%. And the stock has been exhibiting pressure in the past 1 year as well, so far this year, and of course the past 1 month. Today the stock is doing well, given that the net profit figures have beaten what the street was expecting. But yes, what is next? Jay will tell us what is the next that we can watch out for the counter, because so far brokerages have remained cautious on the counter following its Q1 results.
Yeah, as far as IndusInd Bank is concerned, Lovisha, I would say that, see, in this stock, we had seen a huge shorts build up, initially when the issue regarding the accounting or accounting issue had come up, and, the loss were not reported. At that point of time, we had seen huge short build up. And thereafter, we did see short covering, in fact, as well in this stock, and which helped the stock to bounce back from 600 levels until 850, 870 plus levels. So that was all back on short covering. But one more thing, Lovisha, which we also track is that and the FI participation in that particular stock or the sector, and that is what we are witnessing is that, and particularly in IndusInd Bank, is that they have reduced their stock holding drastically in last 6 to 9 months, as far as IndusInd Bank is concerned, clearly indicating, negative trend. And, the bounce which was there in the IndusInd Bank was mainly on account of the short covering. With this price breakdown, we have again seen the shorts getting added up. So, if you ask me, is there any derivative reversal for the long term, indicating that the stock might have bottomed out for a long term? There is no such evidence based on derivatives or quant perspective. It appears that the stock might continue to trade sideways to negative or trade within the range. That is what is my take on IndusInd Bank. Rather, I would say stocks like HDFC Bank, should be focused as far as private sector bank is concerned, because that is relatively performing better, and that is where, overall, if you see, the FI participation has also increased.
Okay, all right. So stock is likely to remain range bound for some time as well. That is the view coming in for IndusInd Bank. Let's take one stock in focus. That is your Paradeep Phosphates, because that stock has been buzzing in trade despite the muted market sentiment. 9% uptick coming in for the counter. The company did deliver stellar set of June quarter performance. If you look at the net profit figures, that jumped about 47x to about 255 crore rupees in the June quarter, and revenue also spiked about 58% on a Y-on-Y basis. Past 1 month has been also quite good for the counter. The stock is up about 24% itself, and today the stock has been doing quite well. What is the next target that we can watch out for, Jay, for Paradeep Phosphates?
Well, this is a cash segment stock, and generally I track derivatives. But however, looking at the quant data, I would say that the volumes have been rising along with the price, and that clearly indicates the overall trend to be bullish in this kind of a market scenario where the overall market has been, witnessing correction, and this stock has been going up with increase in volumes, which is clearly showing strength against the market. And now, looking at, based on that, I think that the recent lows of 190, I mean, the sideways consolidation which we're seeing, till those levels are held, I think one can continue to see upside in this stock. The log target for this stock comes to around 240, 250. So 240, 250 levels can be seen in the short term till 190 levels are held.
190 levels as a support coming in for Paradeep Phosphates as well, and 240 is the resistance that we can watch out for Paradeep. But let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Debu K is asking the view on Sona Comstar and what is the near-term outlook looking like for the stock. If you look at from the past 3 months, the stock has been on a declining trajectory, 5% downtick. So far this year also the stock has not performed well, and the stock is declined about 21% itself. Can the pressure continue, Jay? What is your view on the counter for Sona Comstar?
Sure. I would say that overall the stock has witnessed some correction in the near term, and I think that since the stock has been introduced in the FNO segment, Lovisha, we had seen mostly the short build-up. In fact, the rise which had come in the stock from 380 levels to 540 did not lead to any short covering, much of short covering in this stock, particularly because of which the stock also fell back from 550 levels to recently 450 levels. So I think that till we don't see a meaningful jump above the levels of 550, overall trend on Sona Comps star remains negative because of the excess short positions out here. I'm sure one more thing that beyond 550 levels there will be huge short covering in this stock, which can thereafter help the stock to show that clear uptrend momentum and a gaining momentum as well. Till then, I think the overall trend remains sideways to negative.
Sideways to negative for Sona Comstar. Let's take another viewer query on that note then. Swam Prasad has been asking the view on M&M. So M&M, if you look at from from April lows, the stock has seen a good build up, but past couple of months the stock has remained range bound, oscillating between the 22 to 23 odd levels. 32 to 30 odd levels. Jay, what is the view on the counter for M&M? Do you see any breakout on the horizon?
Sure. Yeah, sure. Lovisha, this stock, particularly in the auto sector, has been one of the outperformers. Not only the auto sector, also in the overall market. I mean, it had actually inched towards its lifetime highs. Derivatives data clearly indicated that we have seen a long build-up as well in this stock. It's just that for this series, it has got a resistance around the levels of 33, 3400, wherein you have seen a good call base, because of which the stock could not surpass those levels, and around 3000, 3100 is a good support. In fact, technically, it seems to have formed kind of a sideways consolidation or a rising wedge sort of a structure. So yes, it is stuck in a range right now, 3400 to 3100. But based on the derivatives futures data, it seems that if 3400 levels gets taken off, there would be good call unwinding, as well as a good uptrend, because the consolidation thereafter seems to be, or would confirm to have complete, and the next leg of rally on the upside would continue. Overall, M&M in the auto pack so far remains an outperformer, and I think till 3000 levels on an overall basis are held. My take on M&M would be positive, and I would say that till 3000 levels are not broken, one can continue to hold on to this stock. The fresh longs could be created either at 3000 or maybe about 3400 levels.
Okay, all right, 3400 levels. That is the resistance that you're watching out for M&M. Let's take another viewer query then. Anune is asking the view on Mazagon stock. He has bought this stock at about 2970 rupees. He's asking whether he should book losses or add more. 2970 is the buying price, and right now the stock has been trading around the levels of 2700. Of course, today the stock has also seen a little bit of a pressure given that it did report a muted set of June quarter performance. We did see that the net profit figures fell about 35% from a Y-on-Y basis. You had revenues, the top line level figures also falling about 12% on a Y-on-Y basis. EBITDA and EBITDA margins also saw a decline in the June quarter itself. And the stock is down, 3% downtick. 1 month also, the stock has been on a sliding trend with about 16% decline. Can we expect the further pressure to continue, or what should you do at this point of time? Should you book losses?
And definitely, one should be exiting from this stock if at all someone is having a leverage position, Lovisha, or is having a long positions probably in the futures segment, because see, the stock has clearly broken down technically from an uptrend line with an increase in open interest since the stock has been introduced to FNO since June. Whatever data we have, it clearly indicates that price has been falling, the OI has been going up, clearly indicating short build up in the stock with a clear sell momentum in the daily weekly charts as well. And that's the case with most of the defense names. We've seen a good rally coming in from April, March lows. Many of them clocked lifetime high levels, as well as the Nifty Defense Index did click a lifetime high levels, and post that we have seen this correction, because of which there has been short build-up, and I think the selling pressure because of which can continue until the levels of 2200 on Mazagon. So from at 2700 currently, I think there is no major support until 22 to 2250 levels. The risk load is not much favorable on the buy side. Hence, a long should be unwound, and probably the aggressive traders can go short now on rise until 3000 levels on the upside are not taken off. The overall trend on Mazagon will be negative.
Okay, all right. The trend is going to be negative for Mazagon stock at this point of time. Let's take another viewer query then. Deepu Jain is asking the view on Bharat Electronics for a short-term view. If you look at, the stock has been on a stellar uptrend, but after July, it's been on a sliding trend given it's on a consolidation mode. Jay, what is your view on the counter? Because we did see the earnings reaction playing out on the counter, and of course, revenue has been missed, but operationally, it's a strong number.
Yeah, I mean, this is also one stock wherein we have recently seen, this stock in fact corrected from 300 to 240 levels. It was mainly on account of long unwinding, I would say. We again did see long build up in this stock. So relatively compared to its peers, this stock has seen a good, decent long build up. The futures data, Lovisha, indicates that there is not much of leverage positions out here on the long side. So on dips, this should be accumulated. I would say that it has got a good support at recent current levels of 380, and below that it would be having a good support at 360. So I think if you find this stock between 380, 360, it could be a good bet on the long side from a medium to long term perspective, not from the short term perspective. For short term, till overall market momentum is not reversing from down to up, I think it would be difficult for most of the stocks to outperform the market. But overall, this stock relatively in its own sector seems to be one of the stock which is relatively better, and is offering a good risk reward, and the FNO data is relatively light or lighter, I would say. Hence, the downside risk is relatively less.
Downside risk is relatively less for Bharat Electronics. So that's a good view coming on the counter. Let's take another viewer query then. Naveen has been asking the view on Shriram Finance. Of course, the stock has been doing well for the second consecutive on the back of its good June quarter performance. But past 1 month has been on a declining trajectory. Jay, can we expect a turnaround going ahead, given that the management has been also quite positive on growth guidance and, of course, margin recovery going ahead?
Yeah, I think that yes, this stock is expected to, in fact, as far as Shriram Finance is concerned, I would say that this is one of the stock which has performed quite well in the past. Recently, it has gone into some sideways consolidation. The management guidance was good. Within this sector, in fact, there was, kind of not so good guidance provided by Bajaj Finance, and which also created, selling pressure in the sector of the stock overall. Um, in the short term, the NBFCs or the banking stocks may face, Lovisha, some names pressure because of the repo rate cut. It takes times to adjust, but medium to long term trend definitely gets established, and that's positive because of that. Because I think that would help more of great offtake and more of bottom line going forward, because the top line growth is likely to increase. And also, the measures taken by Honorable Finance Minister in the last budget is going to take, the effect of this same is going to be seen in this financial year. So that plus lower interest rate definitely would help more credit offtake, and it will help the NBFCs and the banking sector overall to expand their profits. But for the short term, that pain is there. So I think that once this consolidation is over, holding any good NBFC like Shriram Finance or any good private sector bank or maybe a PSU bank, it will provide a good returns going forward, at least in the second half of this financial year. The first half would be somewhat consolidating, and we have so far seen already lifetime highs in most of these stocks. So one quarter consolidation or a couple of months of consolidation can't be ruled out, but that should not be taken too negatively. There can be corrections of profit booking. Rather, I would say not much of short that would get built up here because the overall outlook seems to be positive.
Overall outlook seems to be positive for Shriram Finance too. Let's take another viewer query on that note. We have Anune asking the view on JBM Auto. He's bought the stock at about 697 rupees. He's asking whether he should book losses or hold or add more at this point. 697, that is where he's bought, and right now the stock has been trading at about 640 levels. What should he do, Jay? Because the stock has been an underperformer so far this year.
Well, I have to check the stock based on the quant analysis, as it's a non-derivative stock. Excuse me. And see, the overall trend, as you rightly said, Lovisha, has been down. We have not seen the volumes coming up in the previous uptrend. In fact, there was a day or two exceptional high volume days with the price going up, but otherwise it has been down, and we are not seeing much of buying interest. In fact, the stock is struggling to sustain above its 700 or 750 mark, and till it's not able to take off those levels, I think the overall trend remains to be in the direction of a larger trend, which is down. So I think only beyond the levels of 700, 750 range, broadly, one can think of buying this stock or maybe adding this stock. Otherwise, one can wait to probably let this stock retest its previous lows, or maybe let this stock consolidate until it provides a clear reversal from down to up.
Okay, clear reversal from down to up. All right, Jay, let's just take one more last question. Any topics that you have at this particular point of time, given that we are into the thick of the earnings season?
Well, at the start of the show, Lovisha, you mentioned that Nifty Pharma Index has been one of the index which managed to hold on and to its gains, as well as has outperformed the most of the indices in this recent past. Since the IVs have been rising, I think anything to hide is, as of now, is pharma. Is what it appears based on the data. We have seen good long build-up coming in Cipla. So that is one stock which I think one can add at current levels. The results were good, guidance was good. Con data clearly suggests, or derivatives data clearly suggests long build-up, breakout on the upside. So I think that till 1500 levels are held in the near term, the stock is likely to inch towards the levels of 1700 plus going forward. In fact, Laurus Labs is also one of the stock which particularly we like in Nifty Pharma. But then we had seen a strong uptrend in yesterday's trading session, so there can be some consolidation there. But then that is one stock which one can add on dips. But as of now, as far as the sector is concerned, it would be Pharma, and within which I think that Cipla is one stock which we like. One other stock which we like from the pharma segment is Syngene. As a disclaimer, I would like to add that we have recommended this stock as well as to our clients on a weekly basis. But Syngene on the downside seems to be having a good support around the levels of 680. We are likely to see good short covering coming in this stock, which can help this stock to inch towards the levels of 720 or so. These are the couple of stocks which we like from pharma, and I think this is one sector which one can keep on radar until we do see the index bottoming out in the near term.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Jay. Thank you so much for your time and joining us.
Thank you. It's always a pleasure to be on your show. Thank you, Lovisha.
Thank you. Thank you. All right, let's take a quick check of the markets. We are in the downward trajectory. If you look at the Nifty levels, it has slipped below that 24,700 mark at this point of time, and it continues to be there. We have trimmed some of the losses, however, that we saw earlier in the day. Right now, Nifty is at flat with a negative bias. If you look at Sensex, that, however, has come up in the green with about 32 points gain. So very slim gains that is coming in for the markets. Small recoveries taking place, but given that it is the Sensex monthly expiry derivatives contracts, so we could see some volatility here and there too. On the other hand, let's take a look at some of the sectoral gainers and movers that is contributing to this up move. That is your Nifty Auto and Bank Nifty Index, because both of them are trading with some of the gains. Nifty IT Index has also come up in the green with about 0.4% gain. Nifty Pharma Index also doing well. Nifty Realty Index, after yesterday's sharp underperformance, it's showing a little bit of a resilience with about 1% gains or so. Midcap and small caps, both of them showing a decent recovery with about 0.2% gain, and small caps about flat with a positive bias. So yes, we are seeing a little bit of a tepid recovery at this point, but we'll watch out whether or not this recovery is sustainable throughout the day. But yes, on that note, let's move on to our next guest of the show. We have Feroze Azeez, Deputy CEO of Anand Rathi Wealth, joining us. Feroze, good morning. India Inc.'s earnings have been quite slow so far, and the markets have been speaking the same narrative. So how are you seeing valuations at the current juncture?
Hi, good morning, Lovisha. I think, like you said, the earnings growth have been a little tepid. But I personally think that the earnings growth on a base of 1,117, which is what Nifty's earnings for last year were. In fact, last year's earning itself requires some degree of clarification. The markets don't track it the way we track it. What is the difference is, if you ask anybody what's the earnings growth for Nifty last year, they'll say 6.5% from 1,049 to 1,117. But there were four companies which changed. Those four companies which came in brought in a lower base. So actual growth of Nifty earnings for the last year is not 6.5 as reported on NSE. It is 11.5% for the current 50 Nifty constituents. If you forget those four changes, that's the growth number. Now coming back to what kind of earnings growth we look at, I personally think that we have had about 26, 27 companies have given their results in Nifty. We are looking at a tepid growth, but I personally think that for the financial year, 1,250 rupees of earnings on Nifty are possible. If that were to happen, that's a great 12% growth. And I think I would stick to that guidance. So if that were to happen, medium term is relatively bright, and these are buying opportunities.
Okay. Feroze, but everyone was chasing the Nifty to reach lifetime highs in July and even August itself. Has that view changed at this point of time? Because so far India Inc.'s earnings have not been something that we need to cheer for. And if you look at from the tariff and trade deal front, there also we are still hanging, while most of the developing economies has been inching towards the trade deal. So what is your view at this point of time? Are we still, can we see a limited upside from here on?
In my opinion, of course, previous highs have a sentimental significance. But I personally think that you can't rule that out. If you look at the July series, derivatives is something which we look at for barometers. If you look at synthetic futures of first week of August, it is quoting at 36 rupees. The implied value is 22, 23 rupees as per the forward they should quote. That implies some degree of bullishness for the subsequent Nifty series, which is 7th of August. That's point one. Point two, we're just about 1,500 points away from the peak, and that's close to about 6-7%. And that's not too much. I personally think that we would have finished a one-year time correction September to September. If you have a one-year time correction and 11.5% last financial year growth and about 8.5% for this quarter already, with the 25 companies, we have seen a 8.5% growth, 166 rupees out of the 1,250 rupees earnings which I was speaking about is already in the bag. So coming back to your question, I think you can't rule that out after a one-year time correction. If there is any trigger of a positive sentiment, if the trade deal goes through a little more better than expected, better than the Indonesian trade deal for sure. If that were to happen, the first 300-400 points will trigger a short covering rally because 86% of the FIIs in index futures are short. I personally would not rule out the reversal, unlike most technical traders would.
Okay. Feroze, how do you see the FI flows to pan out? Because here we have US, which is hitting record highs day after day, given that 86% of the S&P 500 companies have beaten what the street was expecting. But here we're still finding, lesser cheers compared to what the US markets have been faring. So how do you see the FI flows to pan out, given that, so far this month, they have been net sellers for Indian markets?
Lovisha, I look at FIs as not one bucket, a three-bucket group, because unfortunately they're called FII, but there are three very distinctly different behavioral patterns. FIIs who invest in indices, on index funds, they have trillions of dollars collected, the vanguards of the world, who follow the MSCI and the FTSE indices of India or emerging market small cap. Those guys are long. They have been adding a lot of money. Whenever there is uncertainty, the second category, which is hedge funds and active fund managers, go light on emerging markets. That's the second category. Third is prop traders, especially if I have to give you some examples. If you go into balance sheets of institutions in the US, you will see India exposures like Harvard and stuff. When their funding has stopped, they've started withdrawing money. So prop traders, active fund managers, passive. Passive has been a net buyer in India, like how? And that goes unnoticed because the other two buckets are in stress. The net flow from FII from FY21, I'm giving you a number which will astonish people, is zero. FY21 ke baad, we finished about 3-4 quarter years. The net buy purchase is zero. But on the same side, in the last 4 years and a quarter, DII purchase has been 15 lakhs, close to 15 lakhs, preceding a 2 lakh number for 8 years. So I personally think DIIs will pump in about 7-8 in the next 8 years, will pump in about 45 to 50 lakh crores minimum in the capital markets. And index funds of FIs will continue to pour in money, which they are, but that's being camouflaged by the other two buckets, overpowering the outflows.
Okay, overpowering the outflows. Feroze, let's talk a little bit more about earnings, because yesterday we did see IndusInd Bank now reporting numbers, and you can see that it did deliver, above what the street was expecting. However, across the private lenders, we can see that the loan growth has been quite sluggish. Margin pain point continues. So how are you positioned towards the private banks versus the PSU banks at this stage?
See, how we look at banking as a sector is we look at it initially on the Nifty Bank. There are about 12 stocks in Nifty Bank. 9 of them have given results. There has been a degrowth of 13.5%. I personally think that if you look at PSUs and private banks, I would bet on private banks even today. Because what's happened is their P's are low, that's okay, but there is 82.5% free float of the bank Nifty Bank Index, which is the highest free float index in different sectors. What does that imply? Higher the free float, higher the index fund weightages. So you have a lot of common stock being gobbled up by passive fund managers. See, if you double the weight and remove the promoter, the index fund's weightages double. That implies a lot of foreign money comes in. So I personally think I would bet with the private banks because their free floats are significantly more than the private public sector banks. That helps index funds exposures being high. That means that there is not too much free float. There could be an optical free float, but the implied free float is negligible. So I would, from a demand supply standpoint and even the business model standpoint for the next 3 years, bet on private sector banks than PSUs.
Okay. Apart from private banks, anything else that you're finding comfort at this point of time in the market?
I think I will position myself, if I were to choose sectors in auto and IT for a reversal. Might be too contrarian for somebody to accept, but I think Nifty Auto degrew last year by 2.6%. When earnings are down, you get downward re-ratings happen. So I think once the earnings base go down, and earnings start reviving, then you get both the benefits. It's a double whammy. When it goes down, it's a double benefit when it goes up. So I would bet for these two sectors to come back with a bang and beat Nifty by about 3-4% at least per annum for the next 3 years.
Okay, quite a contrarian play that you are pointing out right now, Feroze. Feroze, but I'll stick on to the IT sector because that has been seeing a negative momentum on the back of TCS announcing a 2% cut of its global workforce. Do you believe that we could see a similar impact across the sector as the AI spending goes up?
See, I think what happens is if you look at the narrative and the earnings, IT companies, all the 10 have given the results and about 10.3% is the growth for the last quarter. And that is one sector, again, but it has a low free float, but 46% is the free float in IT. I personally think, of course, Indian IT is a very agile business. See, it's like it is not gunning for big innovation. That's actually an advantage. People see it as a disadvantage. The agility for a SaaS platform or a BPO kind of a setup, you're not wanting to pitch in as an innovative partner. You're trying to make sure that you take the dirty work from those innovative partners. If that's what you're going to do, there is going to be relevance. I was drawing up an analogy. You can go into LED bulbs or whichever bulbs, but you will still need an electrician to fix those. So I think that agility is what IT sector of India has shown. You may want to look down upon them for the lack of innovation, but I think there is agility which makes up for the lack of innovation.
Okay. Feroze, if I have to bifurcate the auto sector at this point of time, anything that you're liking particularly compared to your two-wheelers and of course your four-wheelers in comparison? Because while we are seeing some rural-focused stocks still seeing good momentum, for instance, your tractors are still seeing good momentum, but four-wheelers is where the pain is being felt because of the month-on-month decline in sales data too.
Yes, I would bet for the four-wheelers. On the contrary, if I'm going contrarian, then I'll go all the way. Because what happens is I was looking at the kind of competition protection which auto sector has enjoyed over decades in India. And there was a risk to it, but I don't think that's a risk as big. I think I would bet on four-wheelers and buy them at these levels, then go into something which is a momentum play. If I'm going the value way, then you go all the way.
Okay. Also, like for the entire global automotive industry, what is your viewpoint? Because right now we have had deals with EU and Japan as well from the tariff fronts. But India's, of course, we still don't have any deal. But do you still see this as a positive sign, given that the tariff deals earlier was quite higher in comparison, and that's why we could see some good momentum going ahead?
See, global auto, I don't track. I personally think that I think whatever tariff reductions are going to impact the really high segment. If you look at the deal you have with Britain on 110% import duty on cars coming from UK will come down to 10% in a gradual fashion. But that's not the segment in which the Indian automakers operate. So I personally think that, yes, the tariff war I thought would create larger collateral damage. And now I would discount my opinion and say that I'm a little more bullish from that side.
Okay. Feroze, let's get your view on new age stocks also, because plenty of them have been reporting good numbers, be it Paytm, Zomato, or even Car Trade Tech yesterday, profit more than doubled. Do you believe this is a good time to hunt some of these names?
If you're doing the momentum plays when you can go into these new age businesses, of course, some of these businesses have got into Nifty and some really large indices. Now, if you get into Nifty, like one of the four changes was a new age company, then there's about 8-9 lakh crores of AUM of EPFO in Nifty. So even if you have a 1.6% weightage or 1% weightage, there is 8-10,000 crores of money coming in. That creates a lot of traders coming in. So it becomes a self-fulfilling prophecy. If you're looking at earnings and looking at new age companies, that's a wrong direction to look at. If you're playing momentum, you have to analyze demand and supply, and you can always, with regression models, project demand and supply, and then take the bet and get out of them. And earnings is not going to be the biggest Sahara for a new age company, to my mind. And earnings still don't justify a 500, 700 P, whatever be the growth you might want to project. But what happens is if a company comes into Nifty, then you have 8 lakh crores of AUM minimum tracking Nifty, and every month you get an inflow. And that makes sure that the domestic institutional holding goes up. And that creates more faith in the trader because it breaches all the resistances on the higher side. Then you have the fundamental guy saying the domestic institutions have increased it, so I will increase it, and so on. That becomes a self-fulfilling prophecy. And when that same trade gets unwound is when people get caught on the wrong foot. So you will know when to get in. You will need to know when to get out. If I have to drop an analogy, it's like the chavi gudiya. When you actually triggered a good winding, it also unwinds when you let it go. So you have to get out before the unwind starts.
Okay, supply demand dynamics, that is what we need to watch out for. But since you mentioned a lot of them, a lot of things that you're positive on, anything that you're cautious right now in this market?
See, I've not, so of course, there are so many things you would be cautious on, but I personally think that the FMCG space is something which I would say structurally over the next 2-3 years can get derated.
Okay, FMCG. You are playing with two swords here, Feroze, because so far you're playing on the contrarian bets of auto and IT, and where the street has been bullish, conservative on, and the street has been bullish on consumption, and you are quite conservative over there. So yes, quite an interesting
All
take that
depends on
is.
the time frame, Lovisha. See, if somebody, most of them would be looking at a 3-month trade, a 6-month trade. I address those sectors which can give me that alpha of a Nifty compounded 3 to 5%. And that's when you go overweight on a specific sector. So, of course, there are momentums you play. You will make a lot of money if you know when to quit. So the period differs between most people who will be on your show. And that's one of the core reasons why you're looking at a sector with a specific objective. Which sector can beat Nifty by 3 to 5% compounded over 3 years?
Okay, all right. With that, we have to let you go, Feroze. Thank you so much for your time, and we hope that we connect with you soon. All right, let's take a quick check of the markets. Both of the headline indices continue to remain in the flat territory. Both of them eking out with about, flat with a negative bias at this point of time. Nifty, however, it's up about, still with about, 24,650 levels. But yes, up with a positive bias, but still flat in the trade. If you look at some of the sectoral indices that is contributing to the up move, barring the Nifty IT index, all of the sectoral indices have, have turned into the positive territory. India Wix has cooled off. Right now it's with a positive bias. India Wix there too. And if you look at the broader end of the markets, midcap and small cap indices also remain quite supportive in this recovery of the markets. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.